We are back with Phil Davis, founder of philstockworld.com. And Phil, you manage the MoneyTalk portfolio, which is averaging a whopping 85% in gains annually. Congratulations, that is a great number. If people want to review your portfolio on the website, that's the website up on the screen. People can go take a look there to see what has been happening. You're very transparent on what people see. And you say you're planning to add all 3 finalists to the list. 2 of those are runners-up, which we're going to talk about in a moment. So we'll get to those. But maybe just, again, before we jump into the names, which I know people are eager to hear, what's the selection process? What's your approach in picking these ones?
Well, the trade of the year, the idea about trade of the year, it's the trade idea most likely to make 300% over the course of the following year. And it's an options trade, so it's 300% return on the cash that we put into it. Because it's options, we don't actually need the stock to go up. We just need it not to go down. So the main thing we're going to look for is something that is at a near bottom that we feel very comfortable as a solid floor. But we also want to see that there's a catalyst coming in the next 6 to 9 months that's going to lift it when we need it to give us the returns that we're looking for.
All right, so we're going to talk about those. We will also, because we are balanced, talk about the risks of these at the same time too. So runner-up number 1 is Levi's. And so Levi Strauss, yeah, the ticker LEVI. So tell me about this one. What's the play?
Well, on Levi, I mean, like, who doesn't need jeans, right? I mean, that's, recession or no recession, people need jeans. Also, the fact that there's more casual use, it's a subtle thing, but less people in the office, more time wearing jeans, more wear and tear on the jeans, little boost for Levi. Just, it doesn't have to be a big one, just a little one does it. Also, price of cotton has come down because we had a shortage during the pandemic, and that's sort of working its way out. So their costs are getting lower, margins go up, people buy jeans. It's a good company, it's crazy cheap. It's about 11.7 times earnings. So that's another reason we love it.
All right, let's talk about the play. We'll bring up the board and let people know. So you're saying sell. Actually, I'll let you take people through it. So tell us the play.
Sure. The idea is that we want to start off by selling puts. When you sell puts, you're promising to buy the stock. So we're promising to buy the stock for $15. We're going to get paid $2.50 per contract to do it. So we're promising to buy, by selling 10 puts, we're promising to buy 1,000 shares of Levi for $15, and they're paying us $2.50. That means our net would be $12.50 should we be assigned. Levi's is currently trading over 15, so it's a nice discount. And that's our worst case, is getting the stock at a discount.
And then you've got, go ahead, sorry, continue.
Oh, yeah, sure. And then we add to that. So we take this cash, where we don't mind buying Levi anyway, and so it's almost free money. We construct then a bull call spread with 2026 $12 calls, and then sell the $17 calls. And that whole thing nets out to $2,300 for the entire trade. The spread itself is worth $10,000 if it gets to 17, but because we're at 15 now, we're starting out $6,000 in the money for a $2,300 spread. If Levi's just stays flat, we're going to make money. We're going to get $6,000 back on $2,300.
And I have to ask, what's the downside to this? If it goes well below 15, what would happen?
If it goes below 15, you'll get assigned the stock at 15. That's what you did when you sell the puts. You promise you'll buy. You promise for a certain period of time you will buy Levi's for $15 if the person you sold the puts to wants you to.
So people just have to make sure they have the money to fulfill on that should that happen.
You should never sell puts on a stock you don't actually want to own. But if you actually want to own Levi at $15, which is the price now, then it's free money, basically. You're being paid to do what you would have done anyway.
Yeah, got it. Okay, that is the runner-up number 1, or I should say number 3. Now let's move up to runner-up number 2 on the list. This is Corning, ticker GLW. Tell us about this one.
Now, Corning, we're in a new phone cycle with the iPhone 15, and then everybody comes out with competitors for the iPhone 15. There's going to be new iPads coming out. A vast majority of these items use Corning glass. So it's just a kind of boring cyclical company that constantly sells glass. Now, whether the economy is good or bad, everybody's got a phone, and everybody's phone eventually breaks and needs new glass. Whether you buy a new phone or you break the one you have, you need more glass. So we love Corning's resilience. It's also very cheap, trading at 14 times earnings at the moment. And the way we're doing that one is we are selling its now we're being aggressive on Corning because I feel it's very, very much too cheap. We're selling 10 of the puts, the $32 puts, which is higher than the current price. I want to point that out. So we're being aggressive on Corning, selling the puts, but we get $5,000 for selling 10 of those puts. So our net is 27, but then we're going to spend the money. We're going to buy 25 of the 28.35 spreads. That's slightly in the money. And the net of this spread is $4,500. No, I'm sorry. I lost the math on it. I apologize. The net of the spread is $2,000.
Okay.
And the upside potential is $15,500. So you can make 775% back on your cash outlay, but the risk is owning 1,000 shares of GLW at $32, which is higher, $3 higher than the current price.
Got it. Okay, so just people have to understand that's the risk. And again, you better want to own this one, as Phil mentioned, because that is how you do it. Okay, all right. This is the best part. We're going to get to the trade of the year, but we're not going to do it yet. We're going to go to a quick break. Come back. More with Phil, founder of philstockworld.com, and we'll get his trade of the year for 2024.